Hey traders! In today's video, we're diving into the world of trading by combining three powerful indicators that have been making waves in the trading community: the Dynamic Bands, Trend Focus, and Pivotal Reversal Pro. In the dynamic landscape of trading, having a comprehensive strategy is the key to navigating the market with confidence, and each of these indicators brings a unique perspective to the table. And when strategically combined, they create a strategy for identifying high probability trade opportunities. What this means is we'll be looking at a complete trading strategy from start to finish. But before we begin, I would like to ask you for a quick favor and show your support for the video by hitting that like button, as well as subscribe to stay up to date with our future videos. Thanks. Firstly, let's start off with the indicator setup and rules for entry and exit. On the chart, I've selected the British pound against the US dollar in the 15-minute time frame. Now, under the Indicators tab for TradingView, I'm going to add the Dynamic Bands, Trend Focus, and Pivotal Reversal Pro for our trading strategy. The dynamic bands, which are these ones, provide us with real-time insights into market volatility. This helps us adapt our strategy to changing market conditions. Then the trend focus assists us in identifying and capitalizing on prevailing market trends, ensuring we align ourselves with the momentum of the market. Lastly, our Pivotal Reversal Pro equips us with the tools to spot potential trend reversals and capitalize on market turning points. Now, under the settings for the indicator, we are going to make the following changes. Firstly, under the Style tab for the dynamic bands, we are going to unselect the following boxes. Then, for our Pivotal Reversal, under the Inputs tab, we are going to scroll down and unselect the following. Lastly, for our trend focus, we'll leave everything on default. With the indicators all set up, we are ready for our rules for entry. For a valid sell trade, firstly, we are waiting for price action to cross above the upper dynamic band as follows. When price action is above the band, it's showing us that the market is overbought. After this, we are waiting for the Pivotal Reversal Pro to identify a turning point for a reversal in the trend. Then lastly, we are waiting for the trend focus to show us a sell signal, which shows momentum for the sell trade. Now, once the sell signal candle has closed, we can enter our sell trade. For the sell trade, I will place my stop loss above the market swing at 15 pips and aim for double the return, giving us a take profit of 30 pips. By combining these three next generation indicators and cross-checking our analysis against them, we've created a complete strategy that covers turning points or market reversals, volatility, and momentum. Next, let's look at the exact rules for entering a buy trade. On the chart, we have the British pound against the Japanese yen in the 15-minute time frame. For a valid buy trade, firstly, we are waiting for price action to cross below the lower dynamic bands, which shows the market is currently oversold. During this period of market volatility, we are waiting for the pivotal reversal to identify a potential reversal, which is marked as follows with the blue arrow. Now, after we have these two signs of a potential bullish market move, we are waiting for price action to cross the trend focus and give us a buy signal. Now, once the candle has closed confirming the buy signal, we can enter our trade. For the buy trade, I will place my stop loss a couple of points below the market swing at 82 pips, and my take target will be double the size of my stop loss at 164 pips. The idea behind the buy side of the strategy is we are waiting for the market to be oversold with a bullish reversal from the Pivotal Reversal Pro. Additionally, we are waiting for momentum to turn bullish before entering the trade. Now that we have looked at two scalping trades, let's shift our focus towards a swing trade. For this example, I have selected the euro against the US dollar in the daily time frame. Firstly, we are waiting for price action to go above the upper dynamic band, which shows us that the market is overbought. If we head to the settings of the dynamic band and select the following option in the style tab, the indicator will show us these red triangles when the market is overbought. For our examples, to keep the charts nice and clean, I will leave it unselected. Now, once the market is overbought, we are waiting for the pivotal reversal to show these lines and a red triangle. So once these two are in place, we are now waiting for momentum for the bearish trend. This can be identified with a sell signal from the trend focus indicator. Now, once the candle has closed, confirming the sell signal from the trend focus, we can enter our trade. For the sell trade, I will place my stop loss above the swing at 135 pips, and my take target will be set at 270 pips. Of course, once the trade is running in a profit, you can move your stop loss to break even, or alternatively use a trailing stop that captures the profits as the trade moves in your favor. Next, let's explore another swing trade example. For this example, I've selected the British pound against the Canadian dollar in the 4-hour time frame. From our chart, we can see that the market was trending down below our trend focus, which was colored red. Then price action crossed below the lower dynamic band, and we received a bullish alert from the pivotal reversal pro. After this price action crossed above the trend focus, which shows us enough momentum for the buy trade to play out. Now, following the same rules as before, we need to wait for the candle to close before entering our trade. And for this buy trade, I will place my stop loss below the market swing and aim for double the return. For this trade example, my stop loss will be set at 175 pips and my take target at 350 pips. By following the rules of the strategy, we are able to avoid false signals by waiting for multiple confirmations before entering these high probability trade opportunities. Next, let's look at trading a cryptocurrency using this strategy. For this example, I've selected Ethereum against the US dollar in the 4-hour time frame. From the chart, we can see that we were in a downtrend with the price action below the trend focus and the indicator showing red. Then we see price action going below the bottom dynamic band, and we receive a buy signal from the pivotal reversal, which is marked in blue. After these two confluences, we are now waiting for price action to cross the trend focus and the indicator to give us a buy signal. Now, once we get the buy signal from the trend focus, we can enter our buy trade knowing we'll have enough momentum for the trade to play out. For the stop loss, I will place it a couple of points below the market swing and aim for double the return, meaning for every 1% of the account that I risk, I aim to make double the return. Next, let's explore our last trade example. However, before moving forward, if you found this video helpful, please drop it a quick like. Thanks. For our last trade example, I've selected Google or Alphabet in the hourly time frame. From this chart, we can see that price action was in an uptrend with the market forming higher highs and higher lows. Additionally, the trend focus is colored blue with price action trending above it. Then we see price action going above the upper dynamic band, meaning the market is considered overbought. Additionally, we observe the large rejection away from the zone, which has been identified as a sell by a pivotal reversal pro. Now, once we get the sell signal from the trend focus showing enough momentum for the trade to play out, we can enter our sell trade. For the sell trade, I will place my stop loss a couple of points above the recent swing and aim for double the return, giving me a risk to reward ratio of 1 to 2. For these trade examples, we can see that the trio of indicators creates a reliable and user-friendly strategy. With its blend of volatility, momentum, and reversals, it provides traders with a unique edge in entering the market. So, if you haven't already, make sure to visit our website and take a closer look at some of our next generation indicators. So, I hope that you found this video helpful. Until next time, happy trading. Bye.